On today's episode, we're going to dive into the books. Kristen Deese is going to join us today. She is the virtual CFO and my amazing wife, and she's going to teach us a thing or two about the books.
Running a home service business is hard. So how is it that some people make it look so easy? Well, we'll tell you. This is the Freedom Blueprint Podcast. It's always good to hear the wins that successful contractors have. But have you ever thought that the best advice would be to hear about the speed bumps they encountered, the mistakes they've made along the way? We're going to talk about the good, the bad, and the ugly. We want you to be successful and avoid the mistakes others have made. Let's get this party started. Welcome to the Freedom Blueprint Podcast. Now your host, Justin Deese.
All right, welcome to Freedom Blueprint Podcast. I am your host, Justin Deese, and I have once again with me my amazing, awesome wife, Kristen. And we're going to talk about a sensitive topic. And I think anything in accounting can be sensitive. Do you agree?
Sensitive and or boring.
Sensitive and or boring. God bless people that like numbers and spreadsheets. I definitely am not one. So today's topic, we're going to talk about how to close your books in 10 days.
Kind of like how to lose a guy in 10 days, but
Dun, dun, dun.
More business related.
Okay, all right. An oldie but goldie. So how to close your books out in 10 days. I would be curious to know how many companies actually are able to hit this goal on a consistent basis. I don't know the answer to that. And I'm sure that clients that you work with, they hit this goal. That's part of what you help them with. But first of all, before we even get into it, before we get into that, let's say this. What does it even mean? Like, I'm a contractor. I have a wrench and a pickup truck. What does it even mean to close out my books?
Well, every month you have to take what happened in real life in your bank accounts and your credit cards and different business accounts and make sure that they match what QuickBooks says happened. So you have to, and that's what the reconciliation process is. So you hear the term, you have to reconcile your accounts over and over and over again in the accounting department. And all it means is that we're making QuickBooks match what happened in real life. So the month-end process is very much a series of reconciliations between different accounts.
Riveting.
I know. Super exciting.
Okay, so closing out the books, basically it's going to be your report card for the end of the month.
Yeah.
It's going to be all your things and where they went.
Yeah, your financial statements are not accurate if you have not reconciled your accounts. And you'll go through and do your reconciliation on all of your bank accounts and savings account that you use, any of your credit cards that you use. You're reconciling your vendors if you have vendors on account to make sure that what you think they owe is what you actually owe. What you owe is what you owe. You're reconciling your accounts receivable between your CRM and your accounting software so that the amount that you think people owe you is what is actually owed to you. And you're just really, it's a way to go through and verify that the information in your accounting software is correct so that when you do go through and review your financial reports, you're looking at good data.
So so that gives us a little high level on what it is. Why is it important?
Well, your accounts have to be reconciled definitely by the end of the year for tax purposes. Okay. But more frequently than that, they need to be done monthly. And you need to be able to look at your financial reports on a regular basis and know where you are in your business, more so than the balance in your bank account. The balance in your bank account is not an accurate representation of how financially healthy your business is. So it is important to do your month ends and to do your closing on a regular basis. And just like anything else, if you let it pile up for months and months and months, it becomes far more difficult to get it back on track than if you do it monthly, like it's designed to be done.
I imagine if you don't, I guess part of the challenge with not doing it is, gosh, how would you have any idea how your business was if you waited until the end of the year? Not to mention the tax. God, well, your CPA bill. Holy cow!
Right. Well,
You're like, here's my shoebox.
yeah. So we want to get away from shoe boxes of receipts. But so the other thing that reconciling does is it's somebody in the company then is reviewing the transactions that are coming out of your bank, specifically from an expense side. You would not know if you had money coming out of your account that wasn't supposed to come out of your account if you weren't reconciling your bank statements every month. If somebody got a hold of your debit card and was buying things that they weren't supposed to be, you probably would not find that in a timely manner. And if you don't find it in a timely manner, it's very difficult to get recoupment from it.
Okay, so know your numbers so that you know where your money is and that your money is staying your money.
Yeah. And even that's outgoing money. So even on incoming money, maybe you aren't realizing that it's taking 15 days for a customer's check to get from the technician to your bank. That is entirely too long. So if you're not doing bank reconciliations and reviewing your accounts receivable and all that kind of stuff on a regular basis, you may not know that something like that is happening.
Okay. So as a cliff note, here's the lesson. You want to close your books out monthly. And so in order to get that done within the 10-day period of time, I'm a business owner. What do I do?
And why is 10 days the magic number?
Why 10 days?
So really it could be done quicker than that. But 10 days feels like a reasonable goal. You can't close out your books, generally speaking, until you have a full bank statement. Most banks close out their statements at the end of the month, but sometimes it's not the end of the month. It just depends. But a lot of times what will happen is companies will wait until the statement drops from their bank before they do anything in the accounting department. And now they're trying to scramble to get all of the information from the bank into the QuickBooks and get it all organized in a couple of days in the first part of the month. Why we want to try to do it by the 10th of the month is because by the time we're reviewing reports, we could be looking at information that happened 6 weeks ago. And if it's not good information that we're looking at, or if it's not good data, we can't fix something that happened 6 weeks ago. We need to be able to, we need to be able to be able to review the past quickly so that we can make changes if we need to.
So what are when we talk about closing the books, what are some of the things that, I know you talked about income statement and reconciliation of bank statements, but what are some other parts of it? What are some, give us the whole picture. Are you looking at inventory? Or are you looking at gas receipts? Or are you looking at payroll?
So really what happens is your month end starts at the beginning of the month. So the whole process of closing everything out starts at the very beginning. And you are, assuming that you're a ServiceTitan user, you're exporting your invoices and your payments with no more than 3 business days lag time. So we don't want to hang on to those exports for a long period of time. We want to get them over to our accounting software, most likely QuickBooks, in a timely manner. And then we also, on the flip side of that, so that accounts for money coming in. We also have to account for the money going out. The money going out is going to be your expenses and the things that you purchase, and gas and supplies and payroll and all that kind of stuff. That also needs to be recorded and accounted for throughout the month. At least 3 times a week, you're pulling recent transaction from your statement. You're tracking down the receipts for everything that you can get receipts on. If you are asking people for receipts 3 weeks after the expense has been made, what's the chances of getting that receipt?
There's
very slim. Very slim. It's been washed. It flew out the window. The dog ate it. It's, whatever the excuse is. So if we're asking...
Then you can't catch the pack of gum that's
right
hidden on that receipt.
The Red Bull that got purchased with the gas. And yeah. So we're gathering all that information throughout the month. And then at the end of the month, when the statement does drop, we might have 2 or 3 days of data to finish up before we're ready to start doing that reconciliation. I've worked with companies who were taking 25 and 35 days to close out their account or to close out their books, and they're now closing it in 4 or 5 days, which is like a huge turnaround. They now have financial reports that they can review in 5 days as opposed to 30. So, working with a client who they're a larger company, and there's a couple people in their accounting department. They're having a hard time getting their books closed in 10 days, to the point where it is the end of the month. It's the beginning of the following month before we can even do the financial review. So in the beginning of February, we're just now reviewing December, which, I mean, it's too long. It's the data is too old to be relevant at that point, to be able to make any good decisions. So she's coming from I don't know how to get ahead if I'm already behind. And so there's two things that have to happen. You have to change your current process so that you're able to get from this point forward data in faster while you're catching up at behind. So it's almost like you have to split into two different mindsets and say, okay, this hour I'm working on catching up the old stuff, and this hour I'm working on this point forward to stay on top of the new stuff. And it's, again, just like anything else, when you're changing a system or you're adding something new, it's a lot of time and effort at the beginning, but once you're ahead of the snowball, then you're just maintaining it.
In my head, I'm trying to think in what position in a company, any company, it can be literally any type of company, works well in overwhelm.
I don't know very many that do.
I can't think of one.
Yeah.
Maybe like a firefighter or somebody that's in that emergency. But yeah, so your accounting people who are not go after it, typically kind of people are probably, if they're operating in overwhelm, I would imagine they're probably a little bit even more reserved. And
so here's what's an interesting thing that I've seen in the past is, because the accounting type person, that C personality, is very follow the rules, doing it right, making sure it's right, it tends to slow them down if they're a perfectionist. They also tend to have blinders on in that, well, this is the way we've always done it. And I'm not even considering the fact that there could be a faster, easier way to do something. And so that a lot of times is something that will hold them back from even considering the idea that there's a faster way or a more efficient way to do something. So that does tend to be a downside of that C personality, is the perfectionism can slow them down, which we want it to be accurate, but we also sometimes it takes the third party to come in and say, okay, hold on a second. Why are we doing that this way? Why are we going this direction and not that direction? And sometimes the answer is just,
so let's say that I'm shoveling through this thing. I just can't hit the 10-day mark, and I'm not sure what to do. Any advice or tips on why can't I? My accounting team keeps telling me I don't know anything about the books. All right, but my accounting team is telling me there's no way to do it. So give us a little bit of insight on that.
I think sometimes if it's taking longer than 10 days to get the books closed, like if it's, rolling into a month to get it all closed out, it might be they're coming from a place of overwhelm in that they're already operating behind, and we're now asking them to not only catch up, but do it faster. So sometimes the pushback might come from they're operating from a place of overwhelm. I would also say, too, that it would probably be time to look at your accounting department's efficiencies or lack thereof. There could be a lot of bouncing back and forth. There's not enough manpower, or maybe there's too many CSR responsibilities that are getting dropped into the plate of your accounting associate, which happens sometimes. So it might be time to reevaluate the entire accounting process and flow of information to make sure that we are not inadvertently putting a whole bunch of extra tasks onto our accounting team. Now, with that being said, a lot of times business owners don't necessarily know what the reasonable responsibilities are for an accounting associate. And to that, I would say the virtual CFO can help you with that.
I was gonna give you a plug on that deal. Yeah, if you don't know, obviously that's what Kristen is here to help you with. So here's a question for you. I bet comes up often is, because you brought up about the CSR. can I have let's say I'm a five truck operation. Can I have my CSR also do my accounting?
I mean, technically, sure. The problem is that a CSR personality and an accounting personality are usually not the same. They're actually usually very different. A CSR is more people oriented, more excited to be on the phone. An accounting type person is going to be a little bit more introverted, very detail oriented. When you put a CSR in an accounting function, there's usually a lot of mistakes. And when you put an accounting person in a CSR position, your call booking rate drops.
So, okay. So from a DISC analysis standpoint, and for those of you who don't know what DISC is a personality. You're actually more
DISC certified, but
Yeah.
you can jump online and Google DISC and get a.
But so what would be a good DISC profile for someone that you would have in your accounting department?
A C.
Okay.
You want a C in your accounting department. A C is the person who is going to follow directions. So they're going to do it right because they don't want to get in trouble for doing it wrong. And they're very detail oriented, which is what you need in the accounting department. You need somebody who is going to hound a technician three and four times with the help of your service managers, of course, to get a receipt. You want that person to make sure that your Service Titan and your QuickBooks are agreeing. And if they aren't, we're going to track it down, right? We're not just going to be like, it's okay. They don't agree. Moving on. Your CSR is going to be the I personality in most cases, which is that people-oriented, sympathetic, wants to make sure that we're building a relationship with the client. And they are exactly opposite on the DISC. And so therefore, pretty much every personality trait is opposite as well.
So what I would say is no.
No, exactly. Right. If you're gonna try to share, like if you're a smaller operation and you can't justify a full-time accounting position, one, you could hire a part-time accounting position. You don't always have to have a full-time person. And two, you could mix other things that are more task-driven. So maybe there's some inventory things that are task-driven. Maybe there's some compliance or permitting, insurance audits. There's other things that you can have your accounting person do that's not necessarily jumping on the phones.
And it falls more in line with having them on the right seat on the bus.
Exactly. Yeah. Yep.
Yeah, that's good. It feels overwhelming, and I'm just hearing you talk about it. So what are some pro tips on getting this done?
I think two things. One is do a little bit every day so that there's not a ton of it at the end of the month to be done. And then the other is have a month-end checklist. When you do something only once a month, it's really easy to forget something on the list. And we all like checklists that we can put a little check mark next to when we're done with the task. So have a month-end checklist that is a gentle reminder of all of the things that you should be looking at and reviewing and closing in order to be able to have a fully set of closed books so that your financial reports are ready to go.
Okay, that is awesome. Do you have anything to help people with that?
I do. I have a template for a month-end close or a month-end checklist available. I do believe that it's going to be in the show notes available to download, or you can email me directly. My email address is Kristen, Kristen, at gcbcoaching.com. So if you send me an email, I'm happy to forward you a template of a month-end checklist that you can make your own depending on what kind of accounts and different things that you have.
Free stuff. People like free stuff. I know I like free stuff. So that's a lot of information. And yes, thank you for a checklist, a free checklist for everybody. I think that's pretty awesome. If someone is going, oh my gosh, this is so much, is there help out there? The answer is yes, there's help. You are the help. So how can they get in touch with you?
You can definitely reach out on my email address. I have a website, KristenDeese.com, KristenDeese.com. You can find out more about the services that I offer through the Virtual CFO. You can find out about the book that Justin and I wrote together about when your business partner is your spouse. And you can definitely reach me through the website as well.
That's awesome. That's awesome. So closing the books out in 10 days. So that's kind of a challenge, right? So for anybody listening, I would say that would be your challenge for the next month. After you hear this, see if you can get your books closed out in 10 days, and then reach out to myself or Kristen if you're either not able to, or share if you are able to. Like, we'd like to celebrate with you as well. Until next time, this is Freedom Blueprint. Until next time, this is Freedom Blueprint Podcast. I'm your host, Justin Deese, and get out there, know your numbers, and keep crushing it.
You've been listening to the Freedom Blueprint Podcast. Information is useless if not applied. So take what you've learned and go and implement it. We hope you've enjoyed the show. If you did, make sure to like, rate, and review. We'll be back soon. But in the meantime, find us on social media at Freedom Blueprint for Home Services, and hit the website at www.freedomblueprintpodcast.com. See you next time.